Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
If you've been following us for a while, you know that we are big proponents of investing in ETFs. Now there's a new kid on the block, the Bitcoin ETF. Should you join the frenzy or proceed with caution? Welcome back to WangHiro with me, Louis, and my co-host, John. On this channel, we talk about personal finance and investing in Malaysia. Today, we ask, what is the Bitcoin ETF and how is it different from investing in Bitcoin directly? And should you do one or the other or both? So, John, most of us know what is a Bitcoin and what is an ETF, but what is a Bitcoin ETF?
The concept of an ETF, but they wrap it around an underlying asset of a Bitcoin. Now, for those of you who have or bought ETFs before, you buy it on an exchange. And for those of you who have bought crypto before, you also buy it on an exchange, but it's in a crypto exchange. Now, the struggle is ETF lives in what we call the fiat world. Fiat currency, that means dollars, US dollars, euros, Singapore dollars, whatever, okay? Different currencies, different exchanges around the world, and then governed by different countries because foreign currency, okay? In the ETF, in the crypto world, there is still quite a big friction for you to convert what we call fiat money into digital crypto money. You know, you go through, some, in the past, I don't know how deep were you involved in crypto, Louis. There were some coins you can only find on different exchanges. So what you do is, when you want to convert into Bitcoin, it's quite easy because they allow a dollar to Bitcoin conversion. But then if you want to buy some alternative coin and it only sits on, let's just say, exchange, let's say FTX, for example, right? You have to convert US dollar to Bitcoin and then go over to FTX, transfer from, let's say, Binance over to FTX, and then FTX have to change that coin over to an altcoin, and then you may not even be able to convert Bitcoin, you have to convert to another coin, and long to short, even I got confused because some of it they can only do core wallet. Some of it you only have to do on a P2P network, not even on a centralized exchange, and all of that. So I think the purpose of the Bitcoin ETF is to get more investors in a very frictionless fiat currency and bring that money so that they have a chance. So this is the storyline. They have a chance. Normal people have a chance to buy crypto at a frictionless experience. I think that's what it's trying to do.
But obviously, there will be some differences, right?
Obviously.
The technicalities of buying Bitcoin directly and Bitcoin ETF. So what's the difference? Like we know different spot Bitcoin.
Okay. Maybe before even spot Bitcoin, we talk about the differences between buying a Bitcoin directly and buying an ETF Bitcoin. So buying an ETF Bitcoin, what you do is you're actually buying into a promise that, let's just say, if it's iShares, which is BlackRock, right? That means iShares are holding this Bitcoin in trust, and then you are actually buying into that trust that, okay, I trust Bitcoin to hold this in a basket of ETFs. Then, when I want to redeem it, that is available on demand.
Okay. So
Okay?
you don't own the Bitcoins directly.
You don't own, BlackRock owns it.
Right.
And actually, BlackRock, technically, is also not BlackRock that owns it, because if they follow regulatory exchange, you need to have another trustee holding. So BlackRock, as the fund manager, cannot own the asset. They are hired to manage the portfolio, but then they don't own, because what if BlackRock just takes your money and run?
Yeah, look.
Right? So there's another a fiduciary person called a trustee. So it could be another bank. It could be Bank of America, Merrill Lynch, or whatever. In Malaysia, let's say if you buy, let's say, a public mutual unit trust, there's actually a trustee, someone like an Amanah Raya, that technically he or she owns, the trustee actually owns the asset. So when you redeem, the trustee is to make sure that the fund manager redeems for you, because he or she is holding the bag, you see. So that's where the difference is. Whereas if you buy Bitcoin directly, you actually own the asset. You own that Bitcoin in your wallet, either it's a hot wallet or a cold wallet. I think that's where the difference is. And obviously, you have to handle the conversion into crypto, the conversion, get your US dollar or your Malaysian ringgit into that one. Now, before we talk about spot Bitcoin ETFs, I think we need to go a little bit into history and to understand what were crypto's first ETF that was actually launched on the stock exchange or fiat stock exchange. So the first Bitcoin ETF was actually not based on a spot, but based on a futures contract. It was this thing called the ProShares Bitcoin Strategy ETF, listed on New York Stock Exchange October 2021. But it was based on a futures contract. So when you base on a futures contract, you're actually not buying the underlying asset itself directly. You're actually buying contracts of taking future possession of this particular asset in the future at a particular price. And therefore, you're not buying that ETF at that point of time. You're actually buying an agreement, a futures contract that you buy in the future. That's why it's called a futures contract. And therefore, all the way from 2021 until today, there has not been a spot Bitcoin ETF. And that's why the launch just recently has brought in a lot of news and hype. So maybe if I were to simplify it further, thing about futures contract is just an agreement between the buyer and the seller to say that, okay, I'm the buyer, I'm going to the seller to say, can you deliver me a certain amount or value of a commodity, and that's why it's traded on a commodities exchange at this particular date in the future at this particular price. Futures contract were designed in the past to actually circumnavigate, or I wouldn't say, okay, not the right word. I would say hedge against prices of commodities like gold, oil, and all these kind of things. And therefore, as a contract, you don't actually need to deliver the physical goods, because if the willing seller and the willing buyer, they're willing to cancel the contract and it keeps on rolling. That means, let's say October contracts come in and then it expires because the price did not hit that particular, we call it a strike point. Then the contract rolls over. So in essence, there's no real asset being exchanged, the underlying. It's just contracts, IOUs. So today, what they've launched is actually a spot. So when you are buying into this ETF, it's actually really buying an underlying asset and tracking that price. And every volatility of the underlying asset will be reflected in the ETF itself. So as of 14 January 2024, there has already been 14 spot Bitcoin ETFs being approved. So obviously, a lot of the guys who were on the futures contract ETFs before will definitely want to jump ship, because here you get to own the underlying asset. Remember earlier I described about if you were to buy Bitcoin directly, you either on a hot wallet or you store it on a hot wallet or cold wallet, you own the underlying asset. That means you own that securitized token. And in the past, with futures contract, you don't get that kind of ownership. In the spot one, then in a way you do. And it's kind of like, I think the pros is that you have a lot of hassle-free kind of experience in buying and selling them. One, you have direct exposure to the Bitcoin prices itself going up and down, convenience of buying on a normal fiat stock exchange rather than converting, putting in a cold wallet, hot wallet. I think the third thing that is advantageous is that the liquidity. Actually, Bitcoin, even in the crypto world, I don't think there is a struggle for liquidity. So what do we mean by liquidity? Means, is there enough volume of buyers and sellers? And usually ETFs, especially in equities or commodities, they are market makers that actually ensure there is liquidity. That means if there's not enough volume to be bought, then the market maker will create that liquidity. If there's not enough volume to sell, they will also create a liquidity. Things vice versa. Yeah? In terms of diversification, I don't think it does, because right now you're only considering one, unless it is bundled together with other altcoins, like maybe Ethereum or maybe other altcoins like Pancake and all decentralized coins. But I think it's going to be difficult though, in my opinion. But you never know. And last but not least, I think risk management. I talked about corporate governance. Once you're on exchange, it's SEC regulated. They're mandated to give you reports. They're mandated to give you updates about what's happening, substantial shareholder buying and selling, all those kind of things. So here comes the crux now. If you buy a futures contract, the struggle is you may not know what's the underlying asset. That's why it has actually kept a lot of people on the sidelines when those future contracts, ETFs, were actually launched. Whereas now, because you own the underlying asset, in a way, the ETF owns the underlying asset, I think that kind of transparency encourages more participants to come into the market, you see. And I think the struggle for most investors is that trust. So you need to be able to trust that there is an underlying asset in there.
Okay, so like, how about like when we compare, like, okay, obviously, like investing in Bitcoin directly, you own the asset, but it's a much more complicated process, it feels like. Then there's the other option of like just trading the spot, and then but there are also the risk of not actually having the asset. Then how about if we compare, right, this Bitcoin ETF to like more conventional ETFs, like let's say one that tracks the S&P 500. Would you say one is riskier than the other, or they're about the same?
I would say that the Bitcoin one will be riskier. Why? Because only one. You only have one underlying asset class. One, whereas a basket. Yeah, I mean, unless it is an ETF of a basket of altcoins, meaning you have Ethereum, you have whatever coins are in there, then the NAV, or the net asset value, is calculated based on the weightage and the spot price of each of these. But if you're talking about only Bitcoin, that means it's only one underlying asset, right? S&P 500, as you know very well, is 500 companies, different industries and all that. Secondly, the S&P 500 and equities in itself is actually you're buying a portion of the business. Whereas in Bitcoin, in this case, what is the business? What's the value derived? It's very supply and demand. So if you were to compare or draw a parallel, I rather use it to compare against precious metals, silver, gold. Very simple, because gold, if you buy a gold ETF, you're talking about a range of spot prices from different exchanges. Let's say Canadian Maple Leaf or Bank Negara Kijang, or whatever exchange that quotes gold prices. They take an aggregate and they put it into this spot price for gold. So but the asset class is the same, it's one. So precious metal, silver, palladium, all that kind of thing. I would say that would be a better comparison rather than an equity, which is a business-backed asset, you see.
So
making sense to you?
Yeah, that makes a lot of sense. So, but would it be like similar levels of risk?
I would say risk, in terms of risk-wise, now with it being an ETF, it's now clearly regulated by the Securities and Exchange Commission. So what happens is this: you talk about public disclosure. Do they need to prepare a report saying that what happened? They have to come up with some kind of governance structure to say that, hey, this is how the ETF is being governed. Where is your money going in? Where is your money going out? What's likely to be the performance of the asset? They all have to do reporting. But if you buy a Bitcoin on, let's just say, a Binance or whatever exchange that you have, maybe, right? There's no requirement for you because it's decentralized. No one is governing it. There's no requirement for reporting. So in terms of customer protection, you're on your own. Whereas an ETF, right, if someone's swindling money from this ETF, SEC can come down hard on them. Did they not produce a report? SEC can come down hard on them again. And that gives some sort of safety mechanism, for the lack of a better word, and also assurance to the customers. Hey, someone is watching over how this asset is being governed. I think that's where that fund flow, like the spot iShares Bitcoin Trust, boom, straight away within a week, 1 billion in terms of asset under management. Because there's always very easy money now. It's everything today that we do is in the fiat currency. So it's so frictionless for the fund flow to go into that. You see where I'm coming from? Whereas in Bitcoin, the crypto world, the Bitcoin world, yes, there's a ledger system. Yes, we know what's in the account, but there's still a friction for people who are not savvy enough to convert into a wallet and then putting the money in, going into a centralized exchange or a decentralized exchange, all that kind of thing, corporate governance. I think that's where investing in Bitcoin directly and investing in this ETF gives you.
Mm,
If you think about the ETF, that means governance structure, whatsoever. Doesn't mean that you can't lose money. Don't get me wrong. Right? In stocks, you can lose money also, but at least there's a governance structure around it. Whereas if you go Bitcoin directly, you pay definitely less fees, because ETF, there's a setup fee, there's a management expense ratio and all that kind of thing, trading fees. On the Bitcoin side, you do have trading fees, or you have to pay for a spread on Binance, but you own the asset class on this side, Bitcoin directly. You don't own the asset class on this side directly, but you have governance. I think that's where I would simplify it.
Oh, I think that's a really, really important qualifier between these two. Because initially I thought maybe Bitcoin would be much more like not as favored, but now I can see how come how it can be a better asset class to buy. But the underlying asset, right, is still Bitcoin, right? For Bitcoin.
Yes.
So it's still, would you say it's still speculative in nature? Because for now, how can we know what's the value?
The value. Okay. So again, I draw your attention or parallel to commodities. What's the value of gold? You think about it, it has an industrial value, to be honest. Actually, you know what's the best metal to be used for electrical conductivity?
Copper?
Gold.
Gold.
Gold has very little resistance. That's why you see all those very expensive audio cables. It's all gold.
Oh, I see.
You notice or not? You go and buy those high-end, AV audio visual cables. It's all gold-plated, gold. Copper, why was it chose as an alternative? Was because one, it's slightly harder than gold. Gold is very soft. Obviously, it's cheaper and more in abundance. But if you talk about, I don't know if you assemble your own PC before, Louis. You take out a processor, right? You know the pins on the processor? You know those are gold?
Oh, no.
There was a heist in Penang. Someone stole an entire truckload of Intel chips, actually, so that it could be melted down for its gold. Yes. No kidding.
Wow.
Yeah.
So, I mean, people wouldn't suspect, right?
Yeah, but obviously industrial use for that is minimal compared to its main use, which is as a decorative piece, as a what do you call it? Jewelry. Yes.
Yeah.
India has the biggest consumption and all that kind of thing. So, I think your underlying your question about underlying value whatsoever, again, it goes back to comparing it to more of a commodity for me, because it has not achieved what it intended to be, which is a medium of exchange for purchasing. So fiat has achieved that, to buy pizza. You want to buy pizza using Bitcoin 10 years ago versus today, right? You know how amount of millions you've lost out on that.
Yeah, well,
right?
It's also that, I think now, because of that story, a lot of people have FOMO, in case, what if this is worth a lot more, then it's
Correct.
just a pizza today.
Yeah, why would you use it as a currency of exchange? I wouldn't. I mean, there's so much, if it's true, which is like there's a scarcity element, 21 million Bitcoins total lifetime. So it's a deflationary. That means it gets more expensive, not inflationary, which gets cheaper, It's a deflationary currency, you see. A lot of people don't get that. So again, as a currency of exchange, fiat is not perfect, but it does the job so far, you see. Yeah, and I think that's where if you were to invest in Bitcoin, you cannot think of it as the value of a currency exchange for me. I know there are some Bitcoin maxis that would argue otherwise, you're entitled to your opinion. But for me, I would look at it as more of a storage of value, scarcity, like a coin, like a gold or whatever. Yeah.
Okay, I mean, knowing this, right, would you say there are better alternatives to this Bitcoin ETF? Like if let's say they want to invest in ETFs.
Okay. Most definitely, there are tons of alternatives, but I think the best one, and it's not just advocated by me, but advocated by some of the best investors in the world. And now, doing research into it, doing a back test, I think it's proven itself well time and time again. It's actually buying an equity ETF, a basket of stocks that own multiple businesses across multiple industries. Fantastic. I mean, Louis, when we started our JV into creating WangHiro, one of the first things you ask is that why don't you teach stocks as much? And you know, I shared a story about how people use it as a means to an end, but then realize that it's a lot of work, right? And you know, we created this ETF course because we knew that it matches the profile of most investors. They want the results, and they want to do it in some sort of a risk-free manner. Not, I wouldn't say completely risk-free, but less risk manner as compared to individual stock picking. And you know, that's why I believe ETF is quite the way to go for most investors. If you're not into deep dive stock research, you're not into you know, having that curiosity to every day search for alpha ideas, right? I really think as an alternative, because it's well diversified, you know, Louis. You think about it.
Yeah.
It's not like a Bitcoin ETF. Yeah, you want to buy Bitcoin, don't get us wrong. Please put in some money. But not money you can lose sleep over. Lah. Right? But if you buy a basket of 500 companies spread across healthcare, oil and gas, medical line, you know, industrials, banks, you know, I hardly think you can go wrong, to be honest. And it still gives you 9 to 10% over the long run. Who can argue with that, man? I mean, it's double EPF. People say EPF 5% is good. Hello, it's not guaranteed, you know. It's only in good years where, you know, equity gives the return, you know, that kind of thing. It's not guaranteed. Guaranteed is only 2.5%, you see. So
And I think in the history of EPFs, I don't think it has hit over like 10%. I don't think that will happen. I mean, don't quote me on that, but you know, tested is like not happening yet. So for us, we have prepared ETF compounders, the course where we will guide you to invest in ETFs. So if you want to learn how to do this, you can subscribe to our waiting list. I'll leave a link in the comment section. Those who subscribe to our waiting list will get an additional discount once we open the course, and we will be opening the program sometime in Q1 this year. Okay, so I think that wraps up everything that we have to say about Bitcoin ETFs. I think that for us, it's also, I mean, for me personally, it was a curiosity for me to understand, oh, you know, this was like a big frenzy, you know, BlackRock being the one, and then they got like $1 billion within like the first week itself. And you know, I'm very sure a lot of Malaysians are already asking, you know, should I put money in Bitcoin ETF in case I lose out? You know, question, right? Okay, so over to you, our audience. What do you think of the Bitcoin ETF? Leave your comments in the comment section below. Like, subscribe, and hit the notifications bell for more updates from us. Thank you for tuning in today, and I'll see you again next week, in our next episode. Bye-bye.